for the last like 12 to 18 months, if you went on, and this is so silly, if you just Googled Optimizely, our ARR reported numbers were much lower. And this is because Optimizely merged with the company EpiServer back in 2020. And the problem with brand awareness is that when you come together two brands, you choose one of the names, people only know you as one thing as opposed to the other. So we have a really diversified business.
All right, we're back at last. Welcome to the Nearbound podcast. And it's always so much fun to spend some time in market with folks and then get them back into the conversation. So today we have in Jeff Cheal from Optimizely that just posted about Optimizely crossing 400 million in revenue. And Jeff, you and I had the chance to meet in New York at a sales assembly dinner and kind of geek out on all things partnerships, Revealed, Nearbound. And I was like, oh my gosh, we have to have you on the pod. So it's so great to see you here, my man.
Yeah, no, thanks for the invite. I appreciate it. And yeah, it's a big day for Optimizely. It's great to get that out there in the world. And it's exciting. Good time to be part of the ship.
100%.
No, that's insane. When I saw that post, I told Jared, I was like, I did not realize that Optimizely was that big. And in a time where, there's a lot of doom and gloom around SaaS, I think just being reminded, like, there's a ton of value being created. There's a ton of success out there as well. So I was excited to see that. And especially because I was like, oh, you're coming on the podcast today. I got to learn what are the secrets from an organization that's crushing it at that level.
Well, we got to share, like a big reason for the announcement, right, is a little bit of just PR about Optimizely, because for the last like 12 to 18 months, if you went on, and this is so silly, if you just Googled Optimizely, our ARR reported numbers were much lower. And this is because Optimizely merged with the company EpiServer back in 2020. And the problem with brand awareness is that when you come together two brands, you choose one of the names, people only know you as one thing as opposed to the other. So we have a really diversified business, and getting away from, I think, a history of Optimizely, which is A/B testing, started in 2012 by two Google product managers, and this really like romantic story, and now merging it with this like platform story and bringing these things like to the forefront. That's what helps us get into market. We were meeting this week. Our CEO was meeting with some of our partners, and you got to ask, like, what our biggest problem is right now, even having like good AR numbers. It's just being aware for the right products. It's being known for something and not everything. And it's really hard to do, especially in a crowded SaaS space.
Oh,
well,
man.
Actually, I want to tie what you just said together, Isaac, with what Jeff just said. Because this just dropped in the past week, was the Scott Brinker's MarTech landscape. Did you see that, Isaac?
Oh my gosh. I had to use a magnifying glass. It was like a Pontillist painting. It was just more absurd than ever.
So I have to comment on this because it's very relevant to kind of this conversation, being that I think Optimizely is one of those pillar companies that, like, how many of these have actually crossed 100 million, much less multiple hundreds of million in revenue, Optimizely being one of the paragons of that space, is that it grew from 11,000 last year to 14,106. It's nearly 30% growth in 1 year for a mature landscape. It's like, I actually did not anticipate that. I didn't think that it was going to grow so much. Now, obviously, a lot of those are AI, fueled MarTech applications. But given what we saw last year in the consolidation and a lot of companies hurting, I was surprised to see so much growth. And maybe, Jeff, you're probably closer to that MarTech, interesting narrative. I'd actually love your opinion on like what you've seen in the past, couple years. Is a lot of companies, rigor around go to market and partnerships. Like, how have you grown in a time where it's like the number of competitors is increasing and the number of net new entrants into the space is increasing?
Yeah, we grew a few different ways. I mean, when we went through 5 or 6 different acquisitions in 3 or 4 years, right? We were acquired by Insight Partners who invested in the business, in a tough time to try to bring together some similar companies. And we modeled out our acquisition strategy around like one concept, and that was growing up into the right on the Gartner Forrester report, right? A DXP platform that had a pretty clear definition of how to win. And, we moved away from the competitors to the standalone solutions, and we're aiming at like the Adobes of the world. And we want to have a cohesive suite. And in doing so, you invest. What came out of that, though, was 10,000 customers with over 70% of them owning just one of our products.
Hmm.
If we just stopped doing new acquisition and did cross sell, we could be growing as well. And that would be a great way to grow at a pretty reasonable pace. And so we're finding vendor consolidation, not only from the buyer perspective, because customers do want to buy from single vendor. We have opinions and options across all these platforms. We bought good solutions that are leaders in a bunch of quadrants, and that's good. I think, the composable solution in a suite solution, we have good things in a lot of places, and that like solidifies to customers. So I think as customers are getting more practical about their spend, they do want to invest in a platform, whether that is Adobe, whether that is Salesforce, whether that is like other brands that have unified MarTech, because it's just frankly too much work to go to multiple vendors, even with good point solutions, right?
So you said something very important, unified MarTech. And if I always can call people's bluff just by going to their homepage. And like, I love that I go to the Optimizely homepage and it says, we are a team player, right? And you're featuring integrations and your ecosystem story, right? And like those Nearbound integrated networks that you have right at your fingertips. And I actually love the marketplace and everything that you all built there. In addition, of course, to the boutique agencies, to the more GSI players that you now have as a part of your ecosystem. That is part of the narrative of this maturing market, is if you don't interoperate, if you're not a team player, if I can't trust one major vendor to help me make 10 downstream decisions, then I don't really want to add a net new vendor.
Right. And I think, on the integration side, like our challenge is that it's not going to be like our system or bust, right? Like we're not the center of anybody's MarTech slide. Like I always position, like if you vision a Salesforce and their own MarTech slide and where you fit in that like mess of confusion and investment, like it is very rare to be the middle, and it's not even really important. Like you have to integrate with the other pieces and places. And so whether that's our product team asking my partnership team to go out there and find key integrations for things that we just don't do well, right? An acknowledgement that when we hit that RFP, a good portion of that RFP is going to be, do you integrate with X? Like, do you integrate with X? And it's going to be that salesperson's like dread and fear to say like, do we integrate with X? And make sure I can say yes, right? Whether that's the pieces that we know they're going to own, like a good CRM or social platforms or whatever it's going to be. And so you can't be a leader if you don't play well with others. And I think we've done a great proactive job of playing well with others.
So I would love to ask you a little bit about, given the size of your ecosystem and you have partners on the tech side as well as the solution side, you as I think your title is VP of partnerships. Is that correct?
Yeah.
What are you doing? Like, how are you starting with the strategic level before we get down to the tactical level? What are you thinking about on kind of like an annual or quarterly cadence in both of those buckets? What are you trying to achieve? Is it like net new partners, or is there a certain number of activities you're trying to drive with partners? And how does that differ from app to solution?
Yep. On the solution side, over 50% of our revenue comes from solution partners, right?
Wow.
And we've been a partner-driven network for our long history on the CMS side, because that's a very partner-driven approach. When I started in 2015, we had no outbound SDRs. We were all inbound, just taking in leads, because the majority of our leads were coming from our partner network, whether that was good or bad. Now we're at this place where we can be proactive. And so the solution side is working with partners on referrals and trying to bring in business by, creating books of business at our partners. When they invest in our tech, we certify them. They want to refer to us. They want to build because they get huge service dollars of our platforms. On tech, it's totally different, because what we're trying to do is establish entropy with our technology partners, right? We're trying to go to the leaders in certain like tech platforms and attach ourselves to those deals, and we compensate our team on referred deals by partners and then influenced. The challenge is like forming a partnership with a tech partner and having them refer business to you. That's like earned equity, and that doesn't happen overnight. You need to really nurture that. And that's a lot of the Nearbound philosophy. It's coming together and be able to align sales teams to each other and gain that equity to where you want to like refer to each other. The fact that we chose to then compensate our team on influence deals where we're sharing intel, we're getting into a room together, we're figuring out how we win together. And so from a team perspective, my KPIs are attached deals. How many deals can we attach a tech partner to? Increase win rate, right? In order to establish when a partner was involved, when they weren't, right? And then renewal rate as well. We definitely look long term at, how many customers are renewing. The closed book revenue, should be there. It's icing on the cake. And how many deals we refer. It's those incremental attributes that allow us to amplify the value of tech partners in the way that we do.
How much are you fighting over the influence component?
It's tough, right? And that's a hard one to attach. I think the business is open to that attribution, knowing that, hey, we're establishing value in intel. I think the important thing, Isaac, is that we have representation on our partner team on the C-level. We have a chief partnership officer, and that chief partnership officer grew her book and her experience in bringing in partners, establishing their place in our business. And so when you bring an influenced attribution to our CFO or to our CSO or whatever, that fight has already been fought, right? And now it's just numbers and it's attached. And I think what they want is accountability for aggressiveness, right? We want to bring our tech partners to deals. We don't want to make it the job of sales reps to ask for it. And so by bringing these people along and adding intel to our win plan on somebody who's already trying to form a win plan, that's where they see the best value.
What I love is how you're talking about the improvements to the business model, right? So like attach isn't necessarily a panacea, partner attach rate, right? PAR. Aaron McGarry is like one of my buddies that talks about this. It was formerly Qualtrics and Salesforce. And I love the talk track around this because what we're trying not to have is that debate about influence. We're like, look, when partner attach rate exists, what happens to the unit economics of the business? Look at the win rate of the partner attached cohort. Is it fundamentally better or is it not? And what we're not talking about and arguing about is the effectiveness of the partner program. What we're talking about is the growth of the business, right? Like you need to be able to demonstrate the impact of partnerships on the overall growth of the business. And that's how you do it. You speak in terms of business numbers, not just partner metrics, qua partner metrics. So I love the way that you frame that. It's how we should be having these conversations in order to have a partner-led or ecosystem-led business that is running Nearbound plays. You even said the Intel play, right? Which I love. It's like, hey, AEs know how to interoperate here, and that Jeff's tech partners aren't just going to hand me deals that are ready to sign on the dotted line for 6 figures. Like I need to build a multi-threaded business case, and not having partners involved would be really silly.
And the good reps are on text exchanges with their counterparts at the partners that they know from a tech perspective.
Because that's what I was going to ask you about. How do those reps work? That's really cool.
They know, and we tee it up for them. Scale is not me, linking reps with each other. It's getting the reps in the same room and letting them establish their business. And they know, whether it's by vertical, by size, we're mid-market enterprise. It's the same enterprise rep at the partner that, keeps the fountain running. They do that work, and we don't need to do that work. So I can go establish the next strategic partner, right? And bring that in. Here, we went through an interesting change. So, when I really got involved in partnerships about over a year ago, we really did not have this attribution for the tech partner team. And even having somebody at the C-level, the philosophy was there, but it took me 9 to 12 months to get over the economics of it. And whether it was where the point's going to come from, what's the attribution of the point? Everything is a point off the deal, right? If it's a percentage, what's that going to? Is that coming out of the marketing budget to acquire the customer? Is that coming out of our retention budget to keep the customer, whatever, because it does all point to money, right? Somebody's not getting margin from that. We're paying out somebody else to do it. I think when it changed was the proof point of the increased win rate, right? To where, we knew that. And then, our CFO or CSO are willing to now add more people to the attribution that will get paid on it by, we're creating better behavior by paying the right people. And it was not easy. It was really not easy. And it was a lot of headaches, and it was a lot of waving the flag to people that otherwise had a lot of other things to care about, and finally getting their attention where they were like, listen, we'll give you the tools. We'll let you do this. We're going to model this out. We're not going to let it go forever without analyzing it. But we trust that the model that you're presenting will work.
Right. So you had to have those tactical, wins and those stories and the reps. Like you have to fight the good fight. Right. Like there is no solution or magic wand where all of a sudden your executive team goes, you know what? You're just right about everything. Like it's an ongoing battle, and you have to be willing to take that flag. And one of the things I talked about in the book, the Nearbound mindset, this journey from curiosity, right, to courage, to conviction, like, you got to be willing to risk and to fight the fight. And that's the job to be done, is you got to unite the departments and, get them to be comfortable with the risk associated with it and build that trust. I think it's a fantastic call out. I had one quick question coming back to, because playing in MarTech for the past couple, cycles of my career, and this is getting a little bit more tactical. One of the partners that I worked with when I was at Drift was a little company called CRO Metrics or Crow Metrics, right? And they're a top agency. They were a top agency partner. I think they might have been number one when I was doing some stuff with Optimizely at Drift. And then if I go to your solutions page now, I'm seeing some bigger names like Proficient, right? And Proficient has a big book of Adobe business. And they're like Premier Platinum, which is CRO Metrics now is like gold. There's a different tier in place. I'd love for you to talk a little bit about like, hey, we have these boutique agencies, but then I see Proficient. Okay, there's some SI growth there, and it's in the Adobe ecosystem. I'm assuming that Proficient and that's going well. Talk to me a little bit about how you go from like these boutique agencies to start winning and having preferred platinum partnerships with an SI like a Proficient.
This is the crazy part, is that you bring together Optimize that has a complete partner philosophy that was almost like in a glass bowl compared to the partner philosophy that was at Episerver. And your tiering is all thrown off, and your attribution is all thrown off, and your value is all thrown off. Note that, Optimizely learned a lot in its partner ecosystem the years before acquisition. It had to go through some growth. And so with the partners that it was choosing, the value that it was gaining, there was a lot of partners out there in the ecosystem making a business off of Google Optimize that just frankly weren't interested in partnering with a platform like Optimizely. And so you met two different companies at the same point. When you bring them together, now we're able to go to a Proficient, for example. And their interest in us is that we can talk to multiple teams in that business and bring those teams together on a single account. And so the Proficients and the bigger GSIs of the world, they're interested in our multi-dimensional aspect. We launched a partnership with WPP, and it's because of their, different agencies focused on different things. Now a CMS project and a development project can be paired with a Crow project to do it that way. That doesn't change our interest in Crow Metrics. We still have that focus with Crow Metrics, where they are a platinum player in their space. They do incredible work in a specific line. They've never really branched out into CMS development and that approach. And so while Optimizely can take a suite approach and we can focus on certain partners that want to touch multiple parts in the ecosystem, we can still tier our partners. Now, I'll say the tiering of partners is an incredibly hard discipline to keep right, because you can't take away a tier unless you want to be yelled at in private and public forums about it. It is impossible to measure different partners in different places in the same way. Our partner team works incredulously to try to get everybody on the same page. But yeah, it's incredibly hard. And so in that note, our public tiers might be mismatched. We look at those partners strategically in a different way on what we're promoting to them and how we're valuing them. And so we'll continue to keep those two things parallel, where there's experimentation only partners that would be valuable, and then the Proficients too.
Well, yeah, what's so interesting about that to me that just stands out is the difference in the end customer, right? So this is where, Isaac, your title is Chief Market Officer, not Chief Marketing Officer. And I've always, had this strong pull towards market dynamics and less so company dynamics. And what you just spoke to was hey, the market that we're growing into requires a different type of partner, right? The customer outcomes, et cetera. And the partner value proposition is different. And what Jeff just said, I think, was a really, really good soundbite on understanding your partner value proposition has to change based on the market that you're going after, the customer demands, and specifically what the partner wants. You have to help that partner solve a problem, right? So this cross-departmental and being able to multi-thread and have a more strategic engagement is absolutely critical compared to, let's say, the conversion rate conversation with Crow Metrics. That doesn't mean that's not important for a subset of your market that you need to grow. But then you start to think about, divisions or market opportunities and territories, not just based on company size, which certainly there's some of that, but based on customer need and demand. And that you're going to have some partners that are really great for some customers and segments, and you're going to have some partners that are, very different. And in that maturation, you start to understand, I understand the market. I understand what the customer wants and what the customer needs. And that's the reason why partnerships exist.
I think Proficient makes its book on Adobe Business, and that's fair. And I think they do that because Adobe provides a suite of tools and good integrations across like multiple touch points that allow a Proficient project at an enterprise level to grow a huge scope of work spanning both like CMS development, marketing operations, strategy, design, like all the pieces that it comes. If we can carve out that in any way by bringing in integrated tools that allow us to tell that same story for a different price point with a different trajectory and company. We're comparing in size all the time. We're really trying to meet those guys at the front, not only in the quadrant, but also like at the customer. And it's a good thing. It's an honor to be able to compete against those guys and have the same story told and be interesting. At the same time, there will always be, dedicated players in our space that just want to do CMS development in that size, but it really is where we want to be. As everybody trajects upwards, it's knowing from a solution partner side that we can meet them at multiple points of their story, because it's ultimately the partner story. It's the story that they're telling. It's the transformation story that we're telling. We're a suite of tools, that fits really well into that story. So you have to build a suite that complements them rather than trying to get them to play your game.
Jeff, I want to bounce back for just a second on the kind of executive buy-in, executive alignment topic, because I want to see if I can tease something out here that I think might be really important for our listeners. So you have what I think a lot of people in partnerships imagine is the perfect scenario. Oh, you've got a CPO, you've got executive buy-in. Sure, it's easy for Jeff because everybody there believes in him and gives him the resources. I want to ask you a question. Even though you have a CPO, even though you have executive buy-in, do you still have to frequently and repeatedly go through the process of proving to your internal teams, to your executives, the value of the approaches you're trying to take, having and rehaving those conversations about whether attach and influence makes sense? How should we do compensation? Is that something that's just settled and now you can do whatever you want, or you are continually having those conversations?
No, and we're not trying to win directly. I think the way that we win is we get sales to be our champion, right? And we prove it to salespeople so that they're screaming on it. Because if we're doing it in our own, like in our own bubble, like they're going to stop believing us after a while. It has to be that we showed marketing, that we were a pipeline generation by doing partner marketing and attribution to partner-led events where Power 3, Power 4 events drove better like pipeline generation than standard field marketing, right? Where we could grab other people's customers and bring them in. On the sales side, we have to have sales reps, not only in our public channels, like saying, hey, we won this deal because of this partner. And that's a big deal too, Isaac, is that like we have a few places in the business that we scream from the rooftops. We have to fight to constantly be in that win wire to say this partner was involved and this deal was made because of this partner. If you do that, the CFO conversation becomes really easy because then they see the amplification. And, I love and hate it. Like our partner community and the partner philosophy that's being built, when it echoes in the boardroom, when our CEO walks in and has a conversation and is told that we won a deal because of an integration, that's going to happen, right? And that wasn't really our work. Like that's going to happen naturally anyway. He doesn't need to say like, oh my gosh, we don't have or we lost a deal because of a certain partnership. Like that stuff is getting echoed the right places. And so we win, but it's diligence, right? It's staying a first class citizen. It's making sure that, the business and the sales philosophy doesn't come first before the partner philosophy. And it's proving to them through like results, right? And picking the right partners and going to market in the right way and helping them win. So, I always say like, it's worse when the business is here and then the partnership is here. Like the more that you overlay those two things, the better you are. And my victory is going to be when partnership revenue is a top line plan on our 2025 revenue. Right now it's add on. Right now it's evergreen. It's benefit. It's on the top. When we are beholden to a certain part of the revenue stream and now we can budget ourselves that way, that's when we really won, right?
Oh man, that was such an epic little monologue there, response to that question. Jared, I was thinking about your rhythm of the business section in Nearbound about the business goals and the partnership goals. The more of those are tightly aligned. I just think it's such a good reminder for listeners. Like if you ever find yourself, and I know many of you do, because I talk with you all the time, feeling a little bit victim-y, like, well, my company, I don't have executive buy-in. We don't have a seat at the table. If only whatever you think is going to solve it, and finally you'll just be free to go do all the things you want to do, and no one will bug you about whether they're working. That's never the case. It's not the case for marketers. It's not the case. It's not the case for any department, let alone partnerships. So like understanding that there's a lot of tools in your toolkit. One is getting those quick, easy wins with the other departments so they can start to believe in you and be willing to give you more time and chance. Another is having I like to call it a causal chain, a logical story for the ways in which partners, that's different from attribution, because attribution is not as easy a lot of times, but at least you can tell a story that's logical and you can show here are the steps along the journey in why partners are going to make that better. Then have attribution to the extent that you can while recognizing it's imperfect. But if you kind of layer those together and then you have stories and anecdotes that you highlight those wins repeatedly, and don't just assume that people, okay, everybody knows now, they get it, I don't need to keep highlighting it. Yes, you do. You need to keep reminding, we won this because of partners. We won this because of partners. That validates our causal theory. That also is fortified by the attribution to the extent that we have it. And you're kind of like cycling through those all the time, even when you have executive buy-in. That conversation never ends. I think that's just a good reminder for everybody.
Yeah, we do. Nobody's ever called me shy. I try to scream every chance that I get. And even we'll announce anytime we have a new connected partner on Reveal. We'll go and put a value proposition to the team and say, this data is now available to sales, and we'll get them interested. And in doing so, in that quick snippet of information, the good sales rep, I can see the adoption and the login of the tools. I can see the interactions on Salesforce. We share the data. I can see the number of interactions I have with the tech team because they see a new dimension, and it invigorates them to want to win more. And it's not peppering it. It's proof too, because it gets them thinking like, what's the next partner that I need? And when they're asking for it, when they're initiating it, like when they're part of the conversation, and it's not just throwing stuff on a wall and seeing what sticks, like then we're all bought in. We have, invited partners to big events throughout the year. Our sales kickoff, we invite partners to we have dedicated partner days, like a lot of other stuff. So partners are part of that ecosystem connected directly to sales. And now it's not just like in another room, it's all aligned. And I think that like repetition and like forced behavior makes the financial conversation that'll eventually come much easier,
You have to have the reps and sets. And that's why I love speaking in terms of cadences and rituals and the rhythm of the business, right? From annual down to, the daily, data plays, right? So kind of picking that apart a little bit more, I think a lot of folks haven't really seen the promised land when it comes to effectively utilizing partner data, right? Like I've written at length about this. Like I think one of the first pieces of content is I wrote with Kevin Linehan on the Reveal team. We wrote like a 55-page guide about the ultimate guide.
That was the hardest editing job I've ever had in my life, trying to whittle that thing down.
So like it was literally just about how to utilize partner data and track partner activities between sellers and reps. Cause like that actually actioning the data is the hardest part. I'd love for you to unpack a little bit more down that story, Jeff, of like, hey, so we announce that we have a new connected partner and this data is available. What else is happening? Like talk to us a little bit more about how you're actioning this in a way that you feel like, hey, this is a big part of, versus waiting for partners to come to you. You are activating it.
Yeah, we're lucky enough to have managers who sort through that data. And I think like sales reps won't discover it on their own, but man, they will absolutely take it once you show them and bring more deals to the table. And so a few dimensions that we do are, like many, when we launch a partnership, we'll find 5 or 6 active deals in the short term. And I tell my managers, like, you have to not just ask for their leads, you have to give them leads back, right? If we're going to be going in and evaluating their customer base and trying to find our opportunities, we also need to like use the data, find our customers versus their prospects and give them a few in return, right? It needs to be synergistic. And then on those deals, when we come to the table, when my manager is inviting rep A versus rep B, I'm also sorting the partner's data to find out other customers of that rep in advance. So I'm trying to bring multiple opportunities to that rep so I brought something that they wouldn't have, make their life easy. Don't try to discover it and make them like social, right? Then once you're in and you start to establish, then it's my manager's job to keep the cadence going, to tell the story, to invite the right data so that the right data points are coming in. We're almost building that playbook of what the conversation is going to look like, because we've all had, the rep to rep conversation where everybody shows up in a bad mood. Nobody wants to help each other. And then suddenly partnerships are getting in the way rather than value props, right? but it's hey, if we bring these points home and we implement this deal, especially since we can attribute to that, then that's value to the job. And then it's finding the way out. What are we going to do next? How are we going to help each other win? Finding that extra. So it is a lot of work. It's almost 3 times the amount of work on the tech partner manager to make that thing go. Once you get that flywheel moving, like our strategic partnerships are really good ones. Like we just don't have to do that anymore. Like they do it for themselves because they know the value that they're getting out of the relationship. Our biggest problem right now is that we truly believe we have too many valuable partnerships to action on at a given point. We just have a huge, ecosystem of tech partners that could be incredibly valuable to us. And, it's very hard to turn, a average partnership into a good partnership. We make the joke that like average partnerships are just really good pen pals, right? They're just amazing pen pals that we say nice things to every once a month. We're supposed to have a one-on-one, but we want to turn those into strategic mutual partnerships through, commercials, through relationships, through everything. And the work to take it is going to be 3 times the effort that you think. But once you get it moving, these will be very valuable for both sides.
So one of the questions I have for you, because I've definitely seen this stall out in that early phase before you get that flywheel going. You get a new partner, you start sharing data with each other, and it's like, cool, this data means there's opportunity everywhere for every department. This can help our CS reps, retain customers. This can help our sales reps, our co-marketing. But when you started with something very concrete, you said we look for like 4 or 5 active deals that we can, utilize that partner to help us with. And we try to give them some open deals that they have who are customers of ours, try to give them maybe some intel, intros, influence. That step right there, I'm really curious who is taking that, because what I notice happens sometimes is your sales team wants the leads from them, but you got to give some info or some leads to them. And that's probably going to come from your CS team. But what incentive do they have? Or is that coming from your sales team as well?
Tech partner manager has to do it.
Okay.
Right.
Got it.
Because nobody else is being attributed on it. And like the CS team will do it in certain relationships, but like the data is so clear. It's searchable. It's findable. Like we don't need these teams to do that. We can put these carrots out. And many times I ask my tech team, like, you need to represent yourself as a salesperson. You need to put yourself out there as we have enough Salesforce data to know the health of the account. You don't need that rep involved because they've got other things to do and they're being asked to join partner calls all the time. Like you have to be their constituent because when you do, they will pick up the slack and drive it. But like, if I don't need to ask the rep, like I can look at the cross set of data. I can see the managers. I'm assuming data quality is good, but I'm going to throw some things up there and help and drive. And so by the time like the involvement is there, it's really already set,
Man, you just cracked that. It's so interesting because I think it's easy to feel like, okay, as a partner pro, I'm just this orchestrator. I'm coordinating everything. I got so many things on my plate. So we'll get a new partner and then I'll say, hey, sales reps, could you help them out and like give, or success reps, give them some intel. And then you're like, hand it off. And you're like, well, they didn't do anything. And they're not going to do anything. Like you're just saying, just go do it yourself. The information is there. The data is there. If you have a quick question to ask the rep on the account, they can answer you directly, but you can go and deliver that information. You can go deliver the value to the partner and grease the skids and make it easier then for you to get that value back for your reps.
I wish SPIFs worked. I mean, they sound good on paper, but like does the common CS like rep who has attainment goals and has 40, 50 customers to manage really care about like $1,000 spiff for the right information? Maybe that they're not going to see for 2 or 3 months. Like it's what we throw out there, but in reality, like if I can do their work on their behalf, like what I want is for them to know when they get the question of like which tech partner should I pursue. Now, doing all that effort does not mean that I could have like 30 good partners that I can like run at that level. Yep. So at some point you have to consolidate and pick the right ones. And that's not fun. I don't like letting a partner down who has good momentum and like not pick it up to speed. But the reality is to give them that executive like presence, you have to deliver at that kind of level and that type of data. And so you end up finding the ones. One last thing too, Isaac, is that when we pick our partners, like a lot of what we think about is, yes, we have a lot of partners that are bought together by our customers, right? The partners that really succeed in co-selling with us are the tech that meet us at the compelling event. When we
Yes.
sell experimentation, for example, there are tools that you cannot buy without other things like a Sixth Sense or a Demand Base or a Content Square or Quantometric. Those are bought by the same buyer. They're in the same budget. They're considered at the same time. Those partnerships are great. I take a lot of partnerships that are enacting on active customers of ours selling down the road. Those are good, but let's focus on the compelling event partners first because that will get sales out of bed, right? They're going to attach themselves to the same RFP, and that makes a difference. So you got to lean in on the ones like that.
Man, and saying no or not yet to partners who you like is a very hard thing to do. But yeah, it's necessary.
It's funny from, a company in 400 million in revenue to, it's just a founder in a slide deck and maybe an MVP product in the VC realm. I mean, Isaac, you've certainly seen this, like, why now? Right? Why now? Like, it's not just enough to have a value proposition. The compelling event for me has always been my best way that I've closed deals or big partnerships or something like that is like, why now? Right? It's like, well, there's an existing initiative, right? And when I talk about nearbound sales or nearbound marketing and like aligning on accounts, it's like, what are you trying to align with your partners? Well, there's a business challenge and there's a business initiative. And guess what? Companies don't talk about on LinkedIn, on their website, their business challenges and their business initiatives to solve them. No one talks about that publicly, right? The only way that you get that information is by working with folks that are going through that process. So you or one of your partners is a part of those business initiatives, and you have some insights into those business challenges. And when you come together for that compelling event, that's where you are inevitably going to see win rates increase because you're selling into an existing business problem with a known solution where you are an expert. So I love that compelling event component that makes you operate more like a business operator by understanding the customer, not just, hey, here's the partners that work well. Well, why do they work well? It's because of what you just said.
Yeah, there's a fear. You look at that RFP sometimes and you see, optimize it, and it has to integrate with XYZ. There's certain things on there that our sales reps know will be a cascading budget decision, right? We're going to buy the CMS before we buy this. We're going to do this before we're going to do this. And nothing scares off sales more than knowing that that other thing might get in the way of your available budget, right? That there's a line of demarcation and they will go away from that partner because they just don't want to get involved. I want to get my money. I don't want that partner involved because I know that might actually come first in the process and come first in the sale. There's not much I can do about that. I can then instead bring along other partners at the compelling event and make tech partnerships a value, even though a particular partner might be a contention, right? I need to bring other things to the table and I need to help show them that it was a group effort so that even though maybe a big ticket item that we sell with, because we have a lot of big ticket items that we sell with, won't get in the way, then the practice itself was still successful, even if that one partner maybe wasn't valuable in that situation.
I have to make a lighter comment on a phrase that you said earlier, because I wrote it down because I loved it so much. Average partnerships are just really good pen pals. Your account executives don't care about Popo, partners on paper only. They couldn't care less. And I think, what is that compelling event, tying those things together? Like, don't bring your account executives or your CSMs pen pals. They don't want more of your work. What they want is they want your help. And that's not where a pen pal comes into play. That's where an activated partner in a customer story with a compelling event comes in. And that's the difference between a partner operator that's just doing a job and a partner operator that's achieving results. And I love how you frame that out, Jeff.
The biggest fear that a sales rep has is losing a deal because we don't integrate with something. And we've had that before. And that goes straight up to the executives. Why don't we have an integration with these guys? It's so silly. What are we paying you for? You should be out there learning ahead of time because our competitor had a better integration in this case. That's just lost effort. That's not feature. That's a thing we can fix, right? And so they're constantly paranoid about the thing that we don't have in order to fix it. And so they will take a meeting with a partner to make sure that they know about it, to make sure they have the relationships, but they're really counting on partnerships as a function to always be able to say yes. I think, having involved in these like pen pal, like partner of paper relationships and these A's come together, they've always got themselves in mind. They're never thinking about the other partner on the other side of the phone the way that a partner manager is. And that's why I think we have to evoke that into place. Bring along intel they have to help them win the deal. Bring along the best partner example is like, I bring along a tech partner. We're talking about a deal. We realize that the tech partner is in another part of the business than I'm in. I bring them into my side of the business. They bring me into their side of the business. Now we're not just helping each other, we're expanding, right? It's giving my sales reps something because inherently we're all a little selfish as we should be. And so you're trying to model out how to make them get something so that I can get what I need to.
So a quick question on the data side again. When you're talking about these compelling events or these pieces of information about a sequence, a cascading effect of budget, the order in which customers are going to buy or expand something, are you tapping into your partner data to set up any kind of automations or alerts that say, hey, this customer is probably ripe because they just became a customer of this partner of ours, which historically means that they're going to be in the market for our offering next. Do you have those kind of processes set up where you're kind of automatically prioritizing or pushing alerts to people? Or is it more of a manual digging into the data account by account as you go?
Manual, but I mean, like, now we have more amplification when somebody just becomes a customer of our partners, right? That new data set. That's a huge dimension of the shared data that we get through a platform like Reveal, right? To know, like, when they just got launched, because we know that investment will typically relate to the other investments that we're seeing if we didn't know about it before. We have way more data than we know what to do with. And that's why, like, a full-time partner manager could look at that dimension. It's very hard to have that automation. A problem that we have too is that some of our partners sell multiple products, and maybe we only integrate with certain parts of their tech stack and certain, like, products that they sell rather than everything. And so, it's certain parts of their business is related to ours. And so I don't know a perfect way to do it. I wish I did, because then we'd be pushing more information to them rather than doing it. It's just got to be diligence to ask the right questions, to find where the decision making was, and be able to look at that data and see the trends to be able to get ahead of it. I know that we are doing our best when we register new deals as a team to look at those new deals, immediately look at the partner data, immediately bring in the partners so that we're not coming at the last minute. And now we're trying to bring in tech partners at the discovery and accepted stage rather than a contract stage to just ask for a reference letter,
There's this like RevOps utopia that I can see looming on the horizon. And it's like people are kind of getting bits and pieces of it. Some things are manual. There's some alerts here and there, but you can imagine a world now that, like, you have all this data. If you have the data from your partner ecosystem and you've got it all flowing into your CRM, over time, the sophistication, like, we're kind of just learning how to use this stuff and to use it well. The ability to proactively push that information wherever it needs to be, to set up triggers, to reprioritize account lists, to set up recommendations for marketing campaigns, webinar. Like, there's just so much there. You start to bring AI into the mix. Like, I start to get really excited about where this stuff can go.
What we're doing better at is, we're big proponents in build with data. We're big proponents in partner data. What we like to do with reps is, like, try to triangulate all the tech that we see that somebody's invested in and try to come up with some idea about their investment level, but what type of tools they bought. And that helps profile out the buyer and their appetite to buy. You can't always get it right, but you can definitely see combinations of tech stack that work. And so where we meet best is where, built with next to partner data, looking at the two data sets, trying to then, extrapolate their cycle and, their investment curve and say, like, are they our ICP? Did we get it right? Like, did we put them in a right ICP bucket? And then allows us to ask the questions, hey, we saw that you invested in this. Was that a part of the business? Was that something you brought in? Like, that's an interesting investment. Or, oh, now we know they have an enterprise budget because of the tools that they buy. We can go and feel really confident about what we're trying to sell.
I think this was such a phenomenal conversation on how to get through, like, the messy middle of the partner phase. It's a great, analogy, kind of like that messy middle. It's like, you're not, in perfection land, Jeff, but I think you're showing, like, hey, getting through the other side of this is actually, there's rewards here. There's gold at the end of this rainbow. And if you stick to it, you follow what Jeff said, you can get through the messy middle, and you still have messy stuff going on. All partner programs do, all businesses do. It doesn't change. It just, okay, the flywheel starts to operate. You start to see the network effects. And I think you've done a phenomenal job. Congrats again on hitting 400 million at Optimizely, with a program that's generating over 50% of your revenue, right?
Yep. No, we appreciate that. And, constantly telling the team, like, you got to pick the right bets. You're building a garden. You got to be feeding all the plants, and some of them are going to grow and some of them are not. And, like, we have to be ready to try to commit to a partner, but fail fast and be able to pivot and do the ones that are more
Yes.
strategic to the business. And the more critical we are and not thinking that, a partnership may be deprioritized, not a partnership put away. We can reinvigorate a partnership after 6 or 9 months. We can focus on one that's strategic to our business now that helps us succeed. And we're constantly balancing the short and the long. And you have to be like flexible with there, and you have to be willing to ebb and flow as other partner teams change and grow and do. So, do it. We have a good framework, Jared, I think, to build a strategic partner, and we'll continue to play that playbook. And if, the forces change, we got to move on and try the next with the same playbook. And you're right, muscle memory is going to be what gets us there.
I love it. Thank you so much for guiding us through the messy middle. Jeff, Isaac, it's good to see you again. We've been trading back and forth on different shows, et cetera. But I'm excited for the next phase. And do we have anything to plug, Isaac?
I feel like I don't know if we officially can yet. I will just say it may or may not be related to our big annual Nearbound event. So I'll leave it at that.
Okay, we got a couple big announcements that are coming up. We haven't dropped any of like the crazy stuff since the book on y'all. So thanks to everyone that listens.
My marketing team was like, Jared, they're like, wow, things have been really nice and calm and regular, and also too calm and regular. I told them we needed to increase our chaos quotient this quarter. So
yeah, absolutely. So pay attention in the next few episodes. We have some big announcements. In fact, we've said they're always going to get bigger and better. The next ones get bigger and better. So I'm really excited when we can announce those. But thank you everyone for listening. If you haven't left us a review on the different podcast channels, go do that for us. I was just on DG's podcast. I'm like, oh, he asked for this every time. So I'm going to ask you, if you've been a longtime listener, go leave us a review on Spotify or Apple Podcasts, or if you're watching on YouTube, hit that like and subscribe.
I got to throw one more plug too. Go
get
the Nearbound book if you haven't read it yet. If you haven't read it yet, you're crazy. Go get it. Go send it to somebody. And if you have read it, give a review of that thing too. Jared is, and if you know people that other podcasts, Jared is kind of doing the podcast tour, talking about the book. So, more than happy to. Now that people are ingesting it, there's a lot of great conversations happening on what do we do next. And so keep it going, keep the conversations going so that we can make it easier.